Getting financing as a real estate investor isn't the same as your first home. Lenders have strict rules, more documentation requirements, and very different ways of calculating rental income. So if you're planning to buy or refinancing an investment property in Ontario, knowing what lenders actually look for can make the difference between approval and a declined file, even with the exact same numbers. Let's break it down with examples. Hey, I'm Saul Yassin, a licensed mortgage agent here in Ontario and a real estate investor for over 15 years. This channel, Mortgages by Saul, is all about giving real estate investors the clarity they need to finance smarter and scale faster. And if you're buying a rental property, a multi-family unit, or even your second or third investment property, this guide will show you what lenders want to see and how to position yourself for approval. When you apply for a mortgage as an investor, lenders look at 5 key areas. So they look at your down payment. So you'll typically need at least 20% down for a rental property, sometimes 25% or more for multi-units or corporate-owned properties. They look at your credit score. So most lenders want to see a credit score of 680 plus, and lower scores may push you to alternative lending or private lending. And they also want to see your debt service ratios. It's referred to as the GDS TDS. So you'll still need to qualify under the stress test, usually at 2% above the contract rate. They look at income and rental income. So your personal income and rental income from the subject property and any others you own are factored in. Each lender uses a different calculation method. For example, a legal duplex in a major market is more appealing to lenders than a cottage, student rental, or rooming house. Lender appetite depends on location and risk profile. Let's look at rental income calculation. So here's where things really vary between lenders. Some use an add-back method where they add a portion of your rental income to your personal income. Others use a rental offset method where they subtract a portion of the rent from the expenses of the property. Both methods can give wildly different results even with the same numbers. That's why you need a professional to help you out. Here's an example. A client has a triplex generating $4,500 a month in rent. So lender A uses 50% add back and they only count $2,250 towards the income. Lender B uses 80% offset, so they count $3,600 directly against the expenses. So with lender A, the client barely qualified. With lender B, they're approved for $100,000 more. That's why choosing the right lender and not just the lower rate is critical. Additional factors to consider. Lenders also look at the number of properties owned. So some lenders cap you at 4 or 5 mortgages, while others can go up to 10 plus. Property condition is important, so major issues like knob and tube wiring, foundation cracks, or mold can cause automatic declines. Ownership structure. So buying in a personal name is straightforward. Using a corporation like a holdco or opco adds complexity and limits your lender pool. Another example where a borrower wanted to buy a fourplex under the holdco, lender A didn't support corporate-owned rentals. Lender B did, but required a personal guarantee and charged a 0.25% premium. Still allowed the deal to close though. So to boost your chances of approval, clean up your credit. Even a 20-point bump can give you access to more lenders and better rates. Maximize reported rental income. So if you underreport rent or have vacant units, that reduces your usable income. So document everything and keep strong personal income. Lenders still want to see stability, especially if your rental income doesn't cover everything. Pick the right lender. Work with a mortgage agent who understands the nuances of investor lending. Not all banks are investor friendly. Again, these videos are just for educational purposes, so make sure you get advice from professionals before you do anything. And if you are looking to buy or refinance on an investment property in Ontario, don't leave it to chance. Book a free consult with me and let's structure your application to show lenders exactly what they want to see. The link is in the description below. Thanks for watching Mortgages by Saul. Like, subscribe, and drop your investor financing questions in the comment. You can also text us if you have any questions, and we'll see you on the next one.